Hello everyone, and welcome to this week's edition of Macro Minutes, our webinar. My name is Conrad Song, Managing Director and Founder of Maqro, and I'll be looking to be your host today. We've got a lot of things that we'll be discussing today. 3 companies that are reported, 3 companies that we think you should keep an eye out for next week. And so yeah, let's jump straight into it. Now, as usual, just to make the disclaimer that everything in this webinar, all the content that you see in front of you or that I discuss, please understand that it is general advice in nature only and does not take into consideration your personal circumstances. Okay, so we're going to be discussing 3 companies this week that have reported, EGG, AMS, and MIN. So let's jump into it. So EGG, now that was released as a recommendation in the small caps division, and that was on the 16th of December 2020. The share price at the time was $2.01. EGG provides marketing communication services to a number of blue chip companies, including Facebook, Audi, Google, Hyundai, and even eBay. Now, after releasing a pretty incredible sort of positive earnings result on the 11th of Feb, so they had gross revenue growth of 45%, NPAT growth of 234%. What we did was we actually upgraded our price target to 275. The price momentum, however, as we expected, kept going and eventually hit our upgraded price target on the 15th, and that one returned for us a cheeky 37% on our recommendation. So this one's a really good example for new clients or for any prospective clients that might be looking at this. Please understand that our recommendations are not static in nature. They are quite dynamic. We will upgrade the price target if we feel as though the momentum is picking up and here to stay. In the same way, we might look to sort of move up a stop loss as we're potentially going to experience some type of downside volatility that we didn't necessarily expect when we initially recommended it. So that's a really good example of something that went our way in the small caps report. The next one we're going to touch on is AMS. Now, AMS was released as a recommendation in the small caps division on the 12th of February 2021 at a share price of 96 cents ahead of its reporting date. AMS, so what they're doing is, so they're involved in the manufacturing and sale of video equipment, and with the usage, we were expecting an outperformance from AMS considering its strong earnings recovery in the last 6 months. And on the 15th of Feb, which was the Monday that just went by, AMS reported stellar results, revenue up 122%, and recovery in the last, 122%, and earnings up 171% versus the PCP or previous corresponding period. Its share price rose by 13% on that day, which is always nice for investors to have a look at post a company releasing its earnings. And the growth, from our point of view, is largely driven from sort of the social video trend that's booming on channels such as YouTube, Twitch, and Instagram in the last 12 months. So that's one for the millennials. We're going to thank them. MIN. So this one we released, so mineral resources. So we released this as a recommendation in the investing division on the 11th of February 2021 after it released strong half-yearly results, including a divvy of $1, which is a 4% yield in one payment. MIN is involved in lithium and iron ore production, as well as providing mining services. MIN's share price has a 96% correlation with lithium prices. So that gives them a huge exposure to lithium as a commodity. Now, we expect the acceleration of the renewable energy thematic across really the globe now, and we're hearing it from all sorts of political profiles and leaders across the globe, that the support for lithium is quite strong, and as a result, the demand. And we're also seeing that the supply of lithium is to remain subdued for the next sort of 6 to 12 months. And so naturally a good one for us. Okay, now stocks to watch out for or keep an eye out on for the next week. We're going to be touching on APE, NEC, and HLS. So let's dive into these ones. So APE, so they released their official results on the 24th of February and are expected to exceed profit guidance which they provided in December. On the 27th of Jan, APE reported unaudited forecasted underlying operating profit before tax, it's a bit of a mouthful, of $209.4 million in 2020, up from $100.4 million. So that's a good rise there, more than double. Their official reports announcement is set to exceed profit guidance, and this confidence has led to a 7% to-date rise in the price of the share price. Now we expect results to follow through in line with their recent update after the increase in car sales that materialized during the back end of 2020. So definitely one for investors to keep an eye out on and look to sort of pick up an allocation, and if you haven't already done so, and try to look for those peaks or corrections in the share price if they do come about. Okay, NEC. NEC will release its earnings report on the 24th of Feb after seeing its competitor News Corp rising 13% following a positive earnings result in the back of a sort of recovering advertising revenue figure. There are increasingly more signs that NEC's previous guidance upgrades was not a one-off, but instead a potential upgrade cycle based on a strong sort of momentum that they're experiencing. So we like this one. We expect NEC to outperform expectations and likely to provide a positive outlook for FY21. And not too many companies are sort of in that position, obviously considering the thematic of COVID right now. So that's a very powerful one that we're backing pretty aggressively. And finally, in terms of the stocks, HLS, so Helios, will be reporting its half-yearly results on the 24th of Feb. Now, formerly Primary Healthcare Limited, as far as their name, it's a medical center operator. It's 3 divisions: pathology, diagnostic imaging services, and day hospitals. Elevated COVID testing provides support to HLS's pathology division, obviously, while a recovering domestic landscape provides support for elective surgery and diagnostics growth. Now, management also announced a $200 million buyback program in 2021, further showing confidence in this year's growth. Another fantastic company that we're behind right now to keep an eye out on. Okay, now looking ahead, obviously we've got the reporting season. We've also got the RBA minutes and economic data. So I'll just jump into sort of the key points for investors. On Thursday, the 18th of February, employment data will be unemployment rate changes. The participation rate is expected to continue to report at pre-pandemic levels, reflecting increased consumer and business confidence. So that's something that investors should be looking out for as a pretty key announcement. Also out on Thursday are US retail sales figures, with the UK's figures to be released this Friday. These figures often act as a yardstick to measure consumer consumers. And then finally, on Wednesday, the 24th of Feb, economic data surrounding the wage price index of Q4 will be released, with the RBA having set target for wage growth between 2 to 3%. The outcome of these figures is likely to foreshadow the stance of monetary policy in the coming months. Now, that's a quick wrap-up of sort of what to look out for, I guess, moving forward for the reports, any sort of key economic data points, what's happened, obviously, in the last sort of couple, weeks. And I guess we'll catch you on the next episode of Macro Minutes. Thank you, guys.